It's Thursday, August 17th, 2023. Please like, please subscribe, hit the bell notification down below and all that good stuff. Let's get right into it today. Dow Jones tumbles nearly 300 points today as stocks fall for third straight day and yields pop. This on CNBC. I watched this on and off earlier today. Dow Jones closed down 290 points. NASDAQ was down 157 points. And what's really concerning here is the 10-year bond yield. Right now, just checked this about 15 minutes ago, you're looking at the 10-year at 4.284. I believe now the markets are beginning to maybe believe what the Fed has been saying. More rates are coming. They're going to hold rates higher for longer. And looking at the 10-year bond yield, absolutely screaming, it believes now that there are more rate hikes coming. That's why I believe the 10-year is on fire right now. Now, we have a Fed meeting coming up in September. I believe that nothing's going to happen at that meeting. We have a November 1st meeting. I believe November is when the Fed will raise again 25 basis points. That's my humble opinion. I don't think they're going to do it in September. They could. I don't think they will, but I think that we'll get another one in November. I don't think we'll get one in December, but I think we will get one in November. So at least one more this year. But I could be wrong. We could get one September and November. We could get one November and December. Anything's possible right now, but I believe that we have at least one more, and November is my forecast. Again, the 10-year bond yield is definitely warning us that more rate hikes are coming. And remember, everything that is attached to the 10-year, credit card rates, mortgage rates, student loan debt, what people are paying on their student loan payments, personal loans, all this debt is based off of the 10-year. So right now, I would say forget about any rate cuts in 2023. We may not even see a rate cut in 2024. Has anybody thought that about maybe the Fed is just going to basically burn all this down? Maybe the Fed is going to destroy the U.S. economy. Maybe the Fed is going to cause a stock market crash. Now, I know that everybody was saying the Fed's going to come to the rescue. The Fed's not going to let anything happen to the markets. But is the Fed now the market's biggest enemy? Is the Fed going to cause an absolute collapse in housing, in bonds, in the stock market? Is the Fed maybe not your friend? Are you buying the dip today? Remember how trendy that was just a few months ago. Buy the dip, buy the dip, buy the dip. How many people are buying the dip right now? I would say, me personally, I'm not buying any dips. All I have in this market are some specific mining stocks. That's it. And I'm not going to share those because I do not want to take any responsibility for anybody taking any losses. Mining stocks are extremely volatile, and people always ask me, which ones are you in? Which ones are you buying? I would never ever say that because I do not want to be responsible for anybody losing their money. So I'm not going to sit here and give anybody stock tips on what I'm buying. Do your own due diligence if that's something you want to do. But again, going back to this, I don't think we're going to be seeing any rate cuts anytime soon. And maybe the market is beginning to figure that out and getting a little bit worried. CNBC, 10-year yield rises to highest level since October of 2022. So this means, and I know a lot of people just go, who cares? It's not going to affect me. Yes, it is, because if you're servicing debt, like your credit cards, guess what's happening to those rates on your credit cards? They're going up. You want to go out and buy a car and you need to borrow money to buy that car. You need to take out a car loan. Guess what? It's going to be more expensive today than it was yesterday to go buy a car if you need to take a loan. Again, if you need to service debt, credit cards, student loan, auto debt, personal loans, all of this is getting more and more expensive. And it seems almost literally like every week it's getting more and more expensive to service debt. How about the national debt? I mean, this is unbelievable. The debt that we have and what it's costing to service the debt. it's going to continue to go up, ladies and gentlemen. It's not coming down anytime soon. And again, so many people thought that the Fed would come to the rescue. I think now that a lot of people are beginning to get very worried about what the Fed is going to do. The Fed, Jerome Powell has stated that if they have to keep raising rates, they're going to keep raising rates. Now, that doesn't mean that they could reverse course in 2024, but you have to think about, what if they don't? What if they keep raising? What if the Fed doesn't come to the rescue? What if the Fed purposely causes massive crashes? Are you prepared to deal with this? Mortgage rates reach highest level in over 20 years. This is on Fox Business Today. I just looked at bankrate.com. 7.51% for a 30-year fixed mortgage today. 7.51%. And when you think about that rate and home prices at all-time highs, surpassing 2008, we are looking at 7.51% and climbing with home prices at all-time highs. Good luck to the housing market. Good luck if you're in the mortgage industry. Good luck if you're a seller. Good luck, because it is going to get much, much more difficult now to sell a home for many reasons. We are facing some severe economic headwinds, inflation, mortgage rates exploding, and the Fed has already been warning you that more hikes are coming. They're going to hold rates higher for longer, while people absolutely get suffocated in this economy with job losses, inflation, and just the cost of living going up daily. Mortgage rates. This was on the the Drudge Report today. Mortgage rates could hit 8%, economists say, and I believe they got this. This article came from MarketWatch.com, but it was on the front page of the Drudge Report earlier this morning. Mortgage rates could hit 8%, economists say, citing the Great Recession. There are people right now probably paying 9% for a 30-year today. Now, I said 4-5 months ago, maybe it was 6 months ago, that I could see mortgage rates going to 10% plus. And there are people now paying well over 9% today. And so this is no shock. We're almost there right now. We're literally 50 basis points away from being at 8%. That's if you have excellent credit. That's if you're putting a healthy down payment down. Most people don't have excellent credit. Most people don't have 20% to put down. So most people, if they want to buy a house, they're going to be paying 9+% right now. Many paying 9.5%. And if we keep seeing this trend where rates continue to go up, and the Fed raising interest rates and the 10-year bond yield continuing to climb, you're going to see mortgage rates easily break 8%. That's for good credit. But we are really entering uncharted territory, ladies and gentlemen, where you have mortgage rates skyrocketing, 10-year skyrocketing, inflation skyrocketing, home prices skyrocketing. So something's going to give. Something is about to break here, ladies and gentlemen. And typically, it's going to be the sellers of real estate, commercial real estate, residential real estate. Home builders are doing everything they can right now. The Disneyland project right out here, literally 3 to 4 minutes from my house. They're talking about shutting it down. They are talking about shutting it down. And if mortgage rates go much higher and the uncertainty of this economy continues, they're going to shut it down, because they're probably $100 million into it right now, but they're planning on spending $1 billion. So to sit there and go, maybe, $100 million hit is bad, but we can survive that. $1 billion hit, that's going to leave a mark. So maybe we shut it down and we wait 12 or 24 months and hope for the best. Or we see a repeat of what happened in 08, where all of a sudden these developers and builders just started selling these lots and these properties for 10 cents on the dollar just to get rid of the land, because they knew that they were not going to be building for years. So when the crash happened in 2008, you didn't see building take place. I mean, the banks were just releasing all of the foreclosures in 2010, 11, 12, and you couldn't build a house as cheap as you could buy one from the bank. So it took years before the builders started breaking ground again and developing these developments again. So we are no doubt in very uncertain times. Here's another one. Here's why Americans can't stop living paycheck to paycheck. This on Fox Business. The typical worker takes home $3,308 per month after taxes. And I think that's, I don't even think it's that, to be honest with you. Median rent in the US per month, $2,029. That's 61% of the average household take home. Average mortgage is $2,317. So if you're making and taking home $3,000 a month, you've got basically 60% of your money just going to rent or mortgage. Somebody please tell me how this is sustainable. Take this into consideration too. These people, 50, 60% of their income going to rent or mortgage. On top of that being bad enough, how about all the debt that they took on? People have student loan debt. They've taken on a lot of credit card debt. 72% of Americans in this article, it's reported, say that they are not financially secure. And now people are getting worried because they're not financially secure. A few years ago, people didn't seem too worried because, rates were very cheap. You could borrow money cheap. Your credit card rates were cheap. People were getting stimulus checks, triple P loans. They were winning with cryptocurrencies and meme stocks, and it just seemed like fantasy land. Like this euphoria was never going to end. And years ago, just like many of you, many years ago, 5 years ago, I began to see real serious problems here, and I took action. And many people ignored it, and then all the free money hit, and all the meme stock euphoria and the economic euphoria and real estate going up and the Fed buying mortgage-backed securities and just injecting the bubble with more hot air and cheap money. And so people just got drunk on this euphoria, and now they're realizing that they're not financially secure. They're realizing that they're getting tapped out, that the party's over. And many people told me I'm missing out. I should be in these markets. I should be buying a house. I should be borrowing up all this cheap money. And I'm so glad I didn't listen to the masses. I'm so glad I went the opposite way, because now I'm cash deep. I got a lot of gold, I got a lot of silver, I got a lot of cash, and I got time. I've got patience. And so I know that the real deals are coming, not the buying the dip. I plan on buying the crash. And unfortunately, so many people who went out and bought the cars, the Dodge Chargers and Challengers, and who had to go live way beyond their means, and they needed a 3,000 square foot starter home. And, they had to drive the nicest cars, and they had to go to Vegas and gamble and eat at the nicest restaurants and post it all over social media. I hope you had a good time. And I know people will say, I'm going to take advantage of people. No. I'm not taking advantage of anybody. I tried to do my best over the last 5-6 years to warn people not to take the bait, not to get suckered into this. Don't take the easy, cheap money, because it's not free, ladies and gentlemen. It's going to come back to bite you. And now people have got themselves in a real mess. They are in a deep hole, and they're not going to get out. And what are they going to do? They're going to have to give up the cars, the RVs, the boats, the houses, all of that. And it's going to be somewhat of a repeat of 2008, but it's going to be 2008 on steroids. We are heading into a 1929 Great Depression type scenario, without a doubt. Real estate brokerage giant predicts a tough market for remainder of 2023. Redfin CEO Glenn Kelman was on Liz Clayman's show, and he says the real estate market is in a standstill. I 100% agree it is in a standstill, because you now have a war of attrition between buyers and sellers. He says that people who need to sell won't do it because they won't give up their mortgage. What Glenn isn't seeing, and maybe he doesn't want to see this, maybe Glenn's in denial, I don't know, but it's not going to be up to the seller whether he or she wants to sell. we're going to come to a point where the seller is going to be forced to sell whether they want to or not. We are in a very unsustainable time in the U.S. economy, ladies and gentlemen. When you have households with massive debt, like we're seeing right now, households with absolutely no savings, people now surviving on credit cards, paying essentials, people financing their groceries with buy now, pay later loans, tapping out retirements, living paycheck to paycheck. It doesn't matter what the seller wants. It doesn't matter what the seller thinks, because they're not going to have a choice. And that's where this is heading. It's completely unsustainable. And when people have no capital, no money, no savings, no retirement, then no food, they're going to start selling stuff. It's the cars, RVs, the boats, then the houses. And many of these people, by the time they realize this, will probably be upside down on these properties, be forced to walk away and hand the keys back to the bank. This is how it's going to go, in my opinion. Comment down below. Let me know your thoughts. Do you think we're going to avoid all this? Do you think that there will be no market collapse or housing collapse? Or do you think we're going to have a soft landing? I believe we are now going to have a very, very serious crash landing. And we're going to see multiple bubbles in the bond market, the stock market, the housing market, commercial real estate, all begin to burst. And this is going to be hell on earth for the U.S. economy. The U.S. is paying a record amount of interest on its national debt, Fox Business. Again, completely unsustainable. And I have to go back to Dave Ramsey when he would, criticize gold and laugh at gold, laughed at the BRICS nations, and that there's going to be no competition to the almighty U.S. dollar. Absolutely impossible, according to Dave Ramsey. And as he laughs, I feel sad for people who believe this, because I know Dave, he's very heavily invested in real estate and his 401k and all that. But I think he's doing a real serious disservice here to people, because I think you better be preparing. And if you're just saving dollars only, which I think you got to have until you don't, you better have some metal, you better have some gold, you better have some silver, and you better have some knowledge of what's going on. This whole situation with the BRICS nations and 45 countries that are getting ready to join the BRICS nations, this is serious business, ladies and gentlemen. This is going to be life-changing for every human being on planet Earth, including the United States of America. Right now, interest on the debt will hit $5.4 trillion by 2053. How in the world is the United States of America going to pay for this? We are now paying roughly $5 billion a day, and it's going to go up to $5.4 trillion by 2053. Again, this is unsustainable. You think that these nations don't know this. You think that this is all by accident, that the BRICS and alternative currencies and gold-backed currencies and alternative financial systems, you think that this is just talk? Do you think this is just fantasy? They see exactly what's going on. The U.S. system is done, ladies and gentlemen. And as sad as that is to say, it is the truth, and you need to be protecting yourself. Dave Ramsey can tell you to go buy a house, that this is the best time to buy a house. You should know right then and there that this guy has got ulterior motive, because you would not be telling people to go out and make one of the biggest purchases of their life in this environment. That, to me, is an absolute sin. And I don't have anything against Dave Ramsey. I think he's a smart guy. But what happens is people have different motives, and they begin to not, in my opinion, stay humble and loyal to the truth when money is involved. And when he's worth hundreds of millions of dollars, and again, heavily invested in real estate, he does not want to see real estate crash, because he crashes at that point. He doesn't want to see anything happen to the dollar, because he's in trouble. So, of course, he's going to talk down about gold. Of course, he's going to talk up real estate, because he doesn't want to see anything happen to the market. Be careful who you're listening to, ladies and gentlemen. Be careful who you're listening to. Americans burning through excess savings from the health crisis. San Francisco Fed study says Households, it says, could deplete their cash reserve this quarter. Gone. Absolutely no savings, no reserves. Think about also what is going to help deplete people's savings. Insurance costs, health and auto insurance rising, food costs rising, gas prices rising, credit card rates surging. People cannot even make the minimum payment on their credit cards at this point. Literally, the cost of everything is going up. And we see the cost of housing and rent still way up there. And this is just eating away at people. So not the best time to go buy a house. Probably the best time to get yourself out of debt, work as many side hustles as you have to, stack some capital, buy some gold, and get ready because things are going to change, ladies and gentlemen. The hedge. Streamflation bites as searches to cancel Hulu and Disney erupt nationwide. So Disney subscriptions are going to jump from $11 to $14. Hulu's going to go from $15 to $14. Disney, I think, was $7 back in 2019. It will be double that. And so again, this is another scenario where when people don't have money, they have to cancel stuff. And many of these people probably don't want to cancel their Hulu and Disney, but guess what? They're forced to. Just like they're going to be forced to sell their house, forced to cancel Disney, forced to cancel Hulu, not because they want to, because they just have to. They're forced to now because they'd rather eat than watch something on Hulu or Disney. And people are going to come to that point in the housing market too that they're going to have to probably downsize because they need to eat or they're not going to be able to make the car payment or the grocery payment or the health insurance payment or any of that. So they're going to be forced to sell. Again, the cars, the RVs, the boats, the houses, the vacation homes, the Airbnbs, we are going to see fire sales. And I believe in the next 12 to 24 months, you're going to see things you never thought possible. Now, if you went through the 2008 crisis like I did, it's a huge learning experience. This is not going to shock me. I've seen this movie before. I know how it plays out. I'm much more prepared for this one. I learned my lesson. Now, I wasn't financing a bunch of toys back in the day, but I did have a pile of cash, and thank God I did. But people don't realize how fast they're going to eat through whatever savings they have during the bad times. So, you know, stack as much capital as you can, stack as much gold as you can, because gold's extremely liquid. But I see a time where we could see gold really explode, even though we've seen everything hammered. Right now, gold, silver, Bitcoin, all that absolutely hammered down. I think it's an opportunity to go get some gold, some silver. And I think the way this is going to play out, in my opinion, is we're going to see inflation, deflation play out at the same time. You're going to see the price of maybe commodities, gas, oil, gas and oil going up, food prices going up, where the opposite, you're going to see property, commercial real estate, homes, lots and land coming down and gold going up. So if gold goes up, it's extremely liquid. You would maybe take some of your gold and go buy some real estate. Maybe go buy some income producing real estate. But that's how I see it playing out. Whether it happens or not, I don't really care. But I think that there's a potential for that to happen where we're going to see stagflation or inflation and deflation taking place at the same time. So I would prepare for that. I would have some cash. I would have some gold. I would have some silver, and I would be most of all debt-free before I do anything. Get debt-free. So the Google trend, what people are searching right now, cancel Disney Plus, cancel Hulu. Soon, it's going to be, how do I sell my upside down house? How do I sell in a housing collapse? That's going to be the next search coming to Google. Now I'm going to end on this last article. This just happened Monday in Redlands, California, which is about a half an hour from where I'm making this video. Target store in Redlands, California, Monday night. Absolutely shocking. This was on the New York Post. You can check out the video. 4 men beat up a 13-year-old in this Target store. Now, I bring this up because this is a half hour from my house. Not to say that we haven't had some experiences even closer, but this is 30 minutes from my house at a Target store. 4 men beating up and attacking a 13-year-old in a Redlands Target store. So many people making these videos just believe that this is going to be a financial crisis. Ladies and gentlemen, nobody helped this kid. He was on his own for a couple minutes, but nobody jumped in. Of course, many people filmed it with their phones, but nobody jumped in. Thank God he's okay. But people think that this is just going to be a financial crisis. We are going to see a spiritual crisis. We are right now witnessing a social crisis taking place right here in the US. And you have got to be preparing, because if you cannot protect yourself, how will you protect your assets? How will you protect your family? If something happens to you, your family's in trouble. Somebody's just going to take everything you worked hard for. Your number one asset next to God is security. And again, all these people just believing that some emergency food and a couple bottles of water and a couple silver coins, you're going to get through this no problem. They are either very, very scared of what's coming and too scared to protect themselves, or they are just that foolish. But if you really believe we're going to see an economic collapse here in America, if you really believe that, like I do, I'm 110% sure, because it's already started. It's happening right now, and people are really feeling the pain. If you believe that that is the case, you better understand fully what comes with an economic collapse. Major, major crime. And if you are not prepared to deal with crime, if you are not prepared to protect your family and your assets, you're going to be in very, very big trouble. Your family, your kids are going to be in very, very big trouble. I don't know why anybody would ignore the warning signs. I don't know why anybody would not prepare. Why would you let somebody just take everything you worked so hard for? Why are other people not warning on these financial channels what's coming socially? You need to be preparing right now. And I know that maybe this is scary for some people and they don't want to deal with it, but this is the time to deal with it and get prepared for it right now, not when it happens, because you won't be prepared for it. I'm going to leave it there today. God bless every one of you. Thank you so much for tuning in. I know that these are not the happiest videos. Somebody asked me, what are you going to do if the economy ever turns around? And I pray to God that a miracle takes place in this country and things do turn around. I think that we are in store for a few really, really bad years. But let's just say there's a turn of events and a miracle takes place, and somewhere a few years from now, things turn around. God willing. And it's possible, I'm praying. And I know you are too. What are you going to do? Well, I'm going to make some really great videos, but they won't be here in California. They'll be down south. At that point, maybe I'll do car videos. Maybe I'll go out and buy a Ferrari and do cars and coffee and do some stuff like that. But yeah, they would be much more fun. But right now, you know, people wonder why I don't laugh around, joke around, and all this, because this is my 15 to 20 minutes a day to share with every one of you about the danger that we are in. And I don't think it's funny. I don't think it's a laughing matter or anything to joke around with, because people are getting themselves into big trouble right now, and they know who they are. And they're getting worried about their kids and how they're going to feed their kids and how they're going to make the car payment and the rent payment and all that. And there's just nothing funny about this, because people's lives are at risk here. People's futures, their retirements, everything they've worked for, everything right now is at risk. And so when I take this 15, 20, 25 minutes out of the day, I take it very seriously with all of you, because I know your time is precious. My time is precious. And I want to be very, very honest with all of you. I'm worried. I'm very, very worried, because look, I'm preparing the best that I can. I could probably prepare even better, but no matter how prepared you are, you're going to have to deal with outside risk. There's things out there that are out of our control, and we can only do so much. And so you can only have so much food and water and gold and silver and, you know, extra candles and matches and, you know, all the survivable stuff. But we're going to be dealing with some situations that are completely out of our control, and you have to be ready for that. And so this is a really concerning time. And so I'm sorry I can't laugh and joke like people want me to. But again, my time is precious, your time is precious, and we're talking about real serious business here, where people's lives are going to be at risk. People's entire savings, assets, retirements, futures are all at risk here. So it's not funny. We've never lived in a more serious time to where we all need to be paying attention for our physical safety, our spiritual safety, and our financial safety. God bless. Have a good day. Be walking close to God. Look forward to speaking with all of you very, very soon.